Hello, hello, it's O, and you probably remember this video from Mr. Risk where he was explaining what's better, whole life, term life, and all that jazz. Let's break that down, okay? Again, there are only really two forms of insurance, okay? You have whole life and you have term life, all right? Whole life is a permanent benefit, meaning that it's there for when you die, okay? Term life is a temporary benefit, meaning that it's there if you were to die, what? Early. Let's conceptualize this even more. Whole life is like buying a house. It's expensive, especially nowadays, all right? And it builds equity. It's yours, plain and simple. It's in your name. It builds equity. It's there with you until you get rid of it or something happens that is devastating, right? The only difference is, of course, in whole life's case, when you die, the whole life ends, okay? Term life is like getting an apartment or getting a condo or renting out a home, right? But you have no equity in it. And normally you can get something a lot better for cheaper because it's not really owned by you. It is something that you have temporarily. But again, nowadays, and I'm not trying to get too deep into that, it does seem to be where people are basically facing. Why does this matter? Because at the end of the day, no matter what kind of product someone is trying to give you, it is either whole life or term life or some variation of these two with each other's, right, attributes. What do I mean by that? There are policies that are temporary, but the company in some way or form has allowed for there to be some form of equity that can be built in. Or on the flip side, there are policies that are permanent that build absolutely no equity. It's very interesting. And we're going to break that apart in another video. But why this matters now is because I hear so many people going through is just like, well, you only need to get whole life because that's the best thing that you could possibly do. You only need to get term life. You buy term, invest the rest. And guess what? All of them are wrong. That's right. All of them are wrong. Why am I saying that? Because again, life insurance is bought for what you need it for. That's all. You get life insurance to protect what you find valuable. Yes, it can be used for myriads of things like investing, for building up equity, all that other stuff. But the core reason you get insurance, period, is because you're trying to protect something or you're trying to make sure that if any loss is had in some shape or form, the damage is minimized. Just the same as life insurance. The only thing with life insurance is that there is a guarantee that the person is going to die. Yeah. And whatever comes after that, you mitigate that with the finances coming from that. So then, oh, which one should I choose? Both. Both. Okay. This isn't me trying to get you to buy a crap ton of life insurance. No, this is me telling you how to get life insurance that's actually going to do good for you. First and foremost, get whole life and term life and whatever variations that you can basically get from the company that you are dealing with. What do I mean by that? Whole life, you want to get the amount that is necessary to bury you with. That's the way you want to think about whole life. How much do I need to bury me? Now, if you have more equity and you have more money, you can use whole life for other things. But right now, we're talking about the simple use of life insurance. Your whole life should be enough to bury you and then some. Right now, I would say specifically with more southern states, you are looking at a funeral, if you're actually getting buried, going around $12,000 to about $20,000, depending on what state you're basically in. So your whole life should be somewhere around $25,000, at most $30,000. Again, if we're using the basic aspect of what we need the insurance for. The term life should protect everything else. Remember, whole life is for when you die. When you die. So get enough to basically bury you and then some. Term life, okay, is for if you were to die early. So what does term protect? Term is where you're going to put the big expenses that if you were to die and the finances aren't there anymore, it takes care of that. What are those things? Your income. That's right. Use term to protect your income. Your mortgage. That's right. Use term to protect your mortgage. And guess what? Rent. If you are a renter and you are someone who's going to continuously rent, that bill is still going to be there. Debt, use term life. What do all these things have in common? They are temporary things that are a part of our lives because you can, following specific guidelines of when it comes to your finances, be done with certain bills that you're dealing with. However, whole life is doing what? Protecting the thing that's going to happen. You're going to die. You're going to die. So what have we learned? Whole life is there for when you die. Get enough whole life to bury you and then some, just because, services and whatnot and anything that you want to basically leave over. Term life is for all the rest of everything that is not permanent, because your income isn't permanent depending on who you are. Your mortgage isn't permanent depending on how you go about that. Your debt isn't permanent depending on how you go about that. That is how you truly want to look at life insurance. Because if someone's just saying only this or only this, they're speaking on specifics that may honestly not deal with you. Now, again, there are so many uses for life insurance. In this video, we're talking about the basic uses, but also I don't want so many people to go out there thinking, oh, hey, this is what I get. This is what I get. This is what I get. Getting a blend makes it easier. Okay. And when you get to a different phase in life where you want to start using your life insurance to build equity and go about other things, then that's a different conversation. But if right now the goal is just to make sure, hey, I'm protecting my loved ones and I'm solidified on the fact that if something were to happen to me, their lifestyles don't have to change, you get a blend. You get a blend, okay? And you make sure you work with an insurance agent that is willing to do what you need, not fill their pockets. If you want to learn how to die properly from a licensed professional, like, comment, and subscribe, and I will see you in the next video.